Coming up on Market to Market. Break out the cigars, President Obama normalizes relations with Cuba. And a faith-based effort in the Heartland aims to feed a man for a lifetime. Those stories and market analysis with Darin Newsom next.
Funding for Market to Market is provided by Grinnell Mutual. You think differently about a customer when you stand in the middle of his dreams. We work to make sure you get covered right. Grinnell Mutual, a policy of working together. Information on finding an agent near you is available at grinnellmutual.com. This is the Friday, December 19 edition of Market to Market, the weekly journal of rural America.
Hello, I'm Mike Pearson. The economic outlook for Russia worsened significantly this week as the local currency all but collapsed. The ruble plunged nearly 20% Tuesday to a record low, and it's now worth about half as much as it was in January. The decline is blamed on slumping oil prices and Western sanctions imposed over Russian activities in Ukraine. Russia's central bank raised its benchmark interest rate from 10.5% to a whopping 17% overnight in a desperate attempt to prop up the beleaguered currency and curb inflation. On this side of the Arctic, however, plunging energy costs are pulling consumer prices lower. Gasoline prices, for example, fell by more than 10% in November, reflecting their steepest monthly decline in nearly 6 years. And in a move with sweeping implications for one Russian ally, President Obama acted this week to warm an icy relationship dating back to the Cold War.
These 50 years have shown that isolation has not worked. It's time for a new approach.
Those words this week marked one of the most significant policy shifts toward an adversary in over half a century, as the U.S. announced plans to restore full diplomatic relations with Cuba.
Resultado de un diálogo al más alto nivel.
On Cuban airwaves, President Raul Castro mirrored Obama's plan to open respective embassies and ease restrictions on commerce between the two neighboring nations. While hailed by some Democrats, Obama's move drew the ire of several Republican congressional leaders, including Florida Senator Marco Rubio, who, despite being the son of Cuban immigrants, called Obama the single worst presidential negotiator in his lifetime.
This deal the president has come up with is a terrible trade-off. In exchange for diplomatic recognition, more cooperation on telecommunications, more banking, more commerce, more travel, and more remittances, in the words of Raul Castro, Cuba has agreed to nothing. As he said yesterday in his address to the Cuban people, he said that they were able to get all these concessions without having to give up on any of their principles. And their principles are dictatorship, repression, jailing of your opponents, and exiling the rest.
The U.S. severed ties with the communist island nation some 90 miles off the coast of Florida in 1961 during the Cold War. But a defrost of sorts has allowed for limited agricultural exports to Cuba since 2001, benefiting corn, rice, and poultry producers. And the Agriculture Department estimates nearly $350 million in U.S. farm goods were exported to the Pearl of the Antilles in 2013. Farmers in southeastern states may be the primary beneficiaries of open Cuban markets. According to a 2008 study at Auburn University, a full quarter of the state of Alabama's 2006 agricultural revenue came from exports of catfish, soybeans, and poultry to Cuba. USDA Chief Tom Vilsack backed the reforms, saying, quote, "Today's announcement expands opportunity for U.S. farmers and ranchers to do business in Cuba. It removes technical barriers between U.S. and Cuban companies and creates a more efficient, less burdensome opportunity for Cuba to buy U.S. agricultural products. It also makes those products far more price competitive, which will expand choices for Cuban shoppers at the grocery store and create a new customer base for America's farmers and ranchers." But the president's historic deal does not end the long-standing trade embargo against Cuba. Only Congress can overturn the law barring widespread economic ties to the Caribbean nation.
I've heard your concerns.
And as a GOP majority assumes control of both houses of Congress in January, the prospect of normalized relations with Cuba could be an uphill battle. Proponents of a liberalized trade with Cuba say access to a lucrative new market could be beneficial for both countries. Other supporters believe free trade with the former adversary could reduce poverty and hunger dramatically. Nevertheless, despite the best efforts of numerous government and non-government programs, hunger continues to be one of the most serious issues on the planet. But one initiative in America's Heartland is working to feed people by helping them produce their own food. And its volunteers fight hunger by cultivating fields of faith. Paul Yeager explains.
In 2005, an article in a small-town newspaper inspired Dennis Lundy to sacrifice a significant portion of his income to serve people he would likely never meet. The story featured a group of farmers from Conrad, Iowa, who were producing a crop for needy people thousands of miles away. Lundy believed that if he planted the idea of farming for a cause in the minds of friends, family, and fellow members of his church, together they could make a difference in the lives of those less fortunate.
I tried for a while to get somebody else to do it, and nobody would get interested, so I finally decided I guess it had to be me. Took it to our men's group at church, and we discussed it, and they were game, so we got it underway, and it's just worked every year since then. I feel God gave me what I have and the resources and the knowledge, and it's a good way to use what I was given to help other people.
Dear Lord, we ask you to bless these people again. We ask you to bless their work. We ask you to bless this crop, that it may be fruitful so that people far away from here can know that you love them, and that there's people around here who love them too and are willing to do your work.
That divine calling was the genesis of an effort Lundy called Fields of Faith, but it was far from the first such effort for Foods Resource Bank, a Christian-based charitable organization that facilitates humanitarian projects in 34 countries. Foods Resource Bank supports operations like the one Lundy envisioned, which it identifies as growing projects. And it believes farmers play a pivotal role in their success.
All of a sudden it dawned on me, I hadn't talked to a farmer. And, I changed that. I began talking to farmers over a cup of coffee. And by April that year of 2000, we had 6 or 7 guys in different communities throughout the Midwest, upper Midwest, who wanted to do this. And so that sort of was the foundation then of the Foods Resource Bank.
Fields of Faith officially began when Lundy took 60 acres of his cropland and designated its annual output for charity. The call went out to the local community to donate time, money, and equipment to support the growing project. And the rural community, from seed companies to implement dealers to private citizens, responded. Lundy helped plant the initial crop on his Fields of Faith, which donated time from friends and neighbors. Despite the name, Foods Resource Bank does not provide any direct food relief. Instead, the nonprofit uses funds from its growing projects to build critical infrastructure in developing countries.
And you can probably just run right along that side if you want to.
And growing projects like Fields of Faith have the opportunity to decide where their charitable efforts will be put to work. Foods Resource Bank partners with organizations like Catholic Relief Services, Church World Service, and Lutheran World Relief to help with charitable projects all over the world. The projects range from efforts to improve irrigation projects in mountain villages to improving compost production in urban areas. Once a program is approved, Foods Resource Bank commits to funding the project for 3 to 5 years. And 90% of the funding for the efforts comes from growing projects like the one Fields of Faith has been conducting for the past decade. But that can be a double-edged sword, and the folks at Food Resource Bank are all too keen to the fact that the primary source of revenue, farming, often is volatile and unpredictable. The expenses for the project are kept separately to ensure accounting accuracy while tracking input costs. In years with favorable commodity prices like 2012 and 13, when severe drought pushed corn to $8 per bushel and soybeans above $13, the donation from 60 acres was substantial, despite higher than average production costs. But in leaner years, like 2014, when corn approached $3, Foods Resource Bank plans for dramatically less revenue.
That's why we call it a bank, so that because we have a lot of funds in the bank, so that our members know what monies there are that they can commit to, because we know that our programming is going to be committing to 3 to 5 years, and so we want to make sure that that money is there, because we don't want to start programs that we can't fund.
Currently, more than 200 active growing projects contribute their production to Foods Resource Bank, and along with the agricultural community, celebrated helping the 1 millionth person lifted to sustainable living. Even after Foods Resource Bank takes control of the grain, Fields of Faith still has a few chores to complete, and its leaders begin planning the next crop, identifying potential areas of improvement, and choosing where they want their funds to be deployed and the manner in which their harvest is spent.
You know, some of them talk about needing to dig a well. Well, we don't have any idea what it's like to be thirsty. We don't have any idea what it's like to be hungry. So I can't, you know, to read about some of the things they're doing, how do you relate to that, you know, unless you've been there. But I do know it's helping people.
For Market to Market, I'm Paul Yeager.
Next, the Market to Market Report.
Wall Street rallied this week, posting its largest single-day gain in 3 years. Crude oil prices, on the other hand, plunged to contract lows. And in a week punctuated by volatile trading and a new Russian bear, wheat prices rallied. For the week, March wheat gained more than 25 cents, while the nearby corn contract moved 3 cents higher. Soybeans gave back all of last week's gain and then some, as the March contract lost 15 cents. Nearby meal prices followed suit, giving up $4.30 per ton. In the softs, cotton extended its rally as the March contract improved by 35 cents per hundredweight. Over in the dairy parlor, January Class 3 milk gained 63 cents, while the deferred contract advanced by 32 cents. Livestock prices were pressured again this week as the February cattle contract lost $2.07. Nearby feeders were off nearly $5.50, and the February lean hog contract gave up $1.62. In the financials, the euro lost 22 basis points to a U.S. dollar that soared to a 5-year high Friday. Crude oil actually rallied a couple of sessions en route to a weekly loss of about $1 a barrel. COMEX gold declined by $26.50 per ounce, and the Goldman Sachs Commodity Index lost nearly 5 points to settle at 442.10. Here now to lend us his insight on these and other trends is one of our regular market analysts, Darin Newsom. Darin, welcome back.
Hey, thanks for having me back, Mike.
Now, this was a big week, I should say, in the wheat market. Talk us through a little bit of the geopolitical issues that really moved the market this week.
Oh, there was so much going on in wheat, and it was all of our old adversaries moving to the front, to the front page again of the news. The Russian situation, obviously key because due to the ruble, like what you talked about earlier, the collapse in the ruble, there is this growing concern of skyrocketing inflation, and in order to combat that, one of the ways that Russia is looking at doing that is by possibly holding back some of their wheat off the export market to push the prices of food, wheat, down in Russia. Now, that's possible, but they also have this long list of major customers that they want to continue to move wheat to. So the wheat market has been going back and forth for the last number of weeks on, are they going to ban exports? Are they not? Is it going to be a partial ban? Whatever the case might be, this whole instability in Russia, we've seen it build since over the last year. Certainly looks like now the wheat is going full force, with Russia just being a part of it.
Okay, now if Russia were to do a complete ban, where could these prices head for American wheat producers?
Well, the thing is, what we saw this week is, if you just look at the charts, very impressive. Wheat contracts on all three markets, Chicago, Kansas City, and Minneapolis, went screaming higher, banged their head against some technical price resistance, and then fell down. Now, while they were still higher for the week, they were well off their highs. So we've still got some old technical pressure in there. We've got, we start to see some selling emerge in these markets when they do go up. Very strong rally. Trying to remember exactly what we've got pegged now for prices. But we're up near those technical resistance levels at this time. And I really don't know that we're going to be able to push much past them. I think this market needs to take a little bit of a breather, regardless of what's going on over in Russia and other parts of the world.
So we'll need some concrete news to really push us over that technical resistance.
I still think we're in an uptrend. I still think these markets want to try to go up. Will we test this week's high? Yeah, I think in the coming weeks we're going to test the highs that we saw this week, Chicago, Kansas City, Minneapolis. Pushing to new highs, I think, is going to be where the difficulty lies.
So as we get closer to the top of this trend channel, might be prudent to make some sales?
Possibly. Let's look at the other side of the market. I mean, that's one side. We got the futures going higher, but we also have a great deal of support coming from the commercial side. There is still a lot of buying, even though we're not seeing it on the exports, on the export numbers yet. We've got future spreads trending up, very strong sign. We've got basis holding firm despite the rally in the futures market. So if I'm going to sell in this market, I'm not going to just flood it. But maybe we make some spot sales here and there, maybe just feed a little bit at a time. I'd probably be watching the new crop more than the old because it really seems to be the strong demand in the old crop. We'll see what happens with new crop. But again, with so many issues out there with the winter wheat crop, its conditions as we come out of spring as we come out of dormancy next spring, maybe we'll have some better opportunities in.
All right. Well, now let's jump down and take a look at the corn market. Still continuing its nice little rally up north of $4 now on the board. Some places north of $4 cash. Where does that go for producers? Do you sell at this level?
I think old crop corn is going to start running out of momentum. It's had a nice rally. Posted a high of 414 this week, right in between some resistance between 404 and 426 on the March contract. Seems to be losing a little bit of its momentum. We haven't seen a great deal of export business increase. That's a possibility down the road. It looks like this rally is getting a little long in the tooth. It may decide to pull back. I wouldn't have, I was kind of projecting this idea that we could see a top in the December timeframe, pull back through the winter, and then start to rally again in the spring as U.S. producers head out to the fields, lock their bin doors tight. I think once we get to the beginning of 2015, the strong rally that we've seen, the fact that basis is held firm, I think we're going to see some cash sales being made. So we might want to be ahead of that. So if we see this opportunity, we stay in this area, maybe push a little bit higher above, maybe push a little bit above Friday's close, we might want to reward that with some of the few remaining sales that we've got left from 2014 crop.
Okay, and you touched on export demand, and of course earlier this year China banned importation of U.S. corn due to the MIR 162 genetic trait, and as a beneficiary of that, Milo saw quite a few sales to China. Jared in Oklahoma has a question he submitted to us on Twitter. He can you can reach us there at #IPTVMarket. And his question is, will Chinese Milo demand stay strong now that MIR 162 has been approved? And the flip side, what does that mean for corn demand going forward?
Answer the second question first. What I think could probably happen here is we see U.S. export projections start to increase over time. If this actually comes to pass. I haven't seen anything where it's been made official yet. So while I have been one that thinks that we've been selling corn unofficially to China, I think once we get it on the books where we can start doing it officially, I think we start to see our export number ramped up for corn. Will that automatically shut down Milo? Maybe to a certain degree. But by and large, I think we're still going to see some decent demand for U.S. Milo. So I'm not going to say that market's just going to collapse back. It is going to lose some of its interest once we start moving more corn. As I said, I don't know that we ever actually shut the door completely on U.S. exports of corn into China. So I don't know that it's going to have a huge effect on Milo, but it may slow it a little bit.
It might hurt some of that Milo basis that those guys have been seeing on the
possibly,
side,
yes. But one of the things that's really helped that basis is that we just don't raise as much Milo as we used to. So when we get into these situations where corn's tighter and corn's in high demand, they turn to milo. Milo basis gets stronger.
All right. Well, now let's jump down into the soybeans. Soybeans saw a tremendous rally throughout October, November, and so far in December, but it's turned. Are we headed more into a bear direction here in the soybean market?
Probably not. Not with the old crop market. And I think we have to, as with all of these, we have to make very clear distinctions between old crop and new crop, apples and oranges in most cases. We are still, dealing with some very strong demand for our old crop soybeans, and this should last up until, say, we start to get a better feel for South American crop, or by late February when those South American crops are actually coming, filling the pipeline. So I think up until that point, we're going to continue to see some strong demand for U.S. soybeans. It's going to keep support underneath the market. Right now, we're moving sideways. I would have anticipated soybeans possibly being a little stronger than we are here at the end of the year. But like corn, basis has held firm. We've had a rally in the market. We may start to see some of our 2014 crop get sold, maybe start to bring things down here at the end of the year into early 2015.
Well, and that's the question. You talk about the watching South America's crop, potentially record crop coming out of South America. How long do you play chicken holding off sales to capture that basis advantage into the South American
Well, the
harvest?
market will certainly let us know. Right now, we're starting to see a few cracks appear in the soybean, in some of the important signals that we're looking for, most notably the spreads. While the basis is still holding relatively firm, spreads are having a hard time seeing a continued decrease in carry. So this past week, we saw both the Jan, March, May, and the May, July spreads show a little bit of an increase in its carry. And that's a bit of a concern, showing that there could be some more soybeans coming on, that we're starting to see some U.S. cash sales being made. So, while I think we're going to be able to push this rally beyond where we've been right now, going into, for at least part of the early months of 2015, we are starting to see some signs of concern in this market that we may not be as strong as what we had first anticipated.
So maybe if you've got a lot of bushels or need cash flow, good opportunity to make some sales here.
With soybeans moving sideways, basically turning neutral, yeah, I think you could possibly make some, not all. Again, we'll look for a place to unload the rest of our corn, and we'll keep feeding this soybean market a little bit at a time.
All right, well, now let's jump down into the livestock markets. And for the past several weeks, we've given hogs the short shift on the show. So I want to jump them up to the front of our market discussion. Down $1.62 this week. What's happening in the hog market?
The biggest thing we've got going on in the hog market is we seem to be at this point where we're unsure of demand. Plus, there's a great deal of nervousness for the hog and pig report coming out, I believe, next Tuesday. We can change the size of the hog herd so quickly, so much more quickly than we can in the live cattle. And there's this anticipation that we're going to see large growth again in the hog size, in the herd size. So we've got that pressure coming in. We've got these questions about demand. So all of a sudden our supply-demand situation doesn't look as bullish as it did before. When we thought we might have had our cycle low put in here, I believe, say in October, we bounced slightly and then we've collapsed back. So it just seems like the whole, the market as a whole is starting to feel this pressure. There's really no technical support underneath it right now, and it just kind of opens up this trap door that the hogs have slipped through.
All right, well, now let's jump and look at the cattle market. Cattle on feed report out today, down $2 in fat cattle this week. What does the market look like on Monday?
It was really kind of a mixed cattle on feed report. Depending on who you read, it was bullish, it was bearish. The bottom line is that we're still in a tight supply situation in cattle, and if we're growing the herd at all, it is very slowly, as is as is usually the case in the cattle market. To me, I think we have turned a corner here for the end of the year. I think that unless we get some sort of widespread weather problem across much of the feedlot area, the feeding area of the southern plains and so on, I think we want to see. I think the cattle market wants to come down. So we got a little bit of a bounce after we increased daily price limits in both cattle and feeder cattle, live cattle, feeder cattle. Got a little bit of a bounce off of that. I think once kind of emotions cool off a little bit over the weekend, it's possible that early next week we start to see the live cattle market coming under pressure again.
And now, do you see the same thing happening in feeder cattle, which was a big market discussion this week as it plunged, $10, $12?
Yeah.
In limit move after limit move.
Exactly. And again, the CME increased the daily limits, and they'd even expanded those for a day. And again, usually what that does is it puts the brakes on, and where you don't see as much selling. Now, the thing that feeders have going for it right now is that the futures market is priced well underneath the feeder cattle index. And this means that basis is probably weaker than it needs to be, particularly if we still have solid demand. So While I would think, while my charts show me that feeder cattle should still come down, January contract moving into the low twos, the actual supply and demand situation may not let that happen. So let's take a look at the market again on Monday, see if it starts to stabilize. If it starts to follow cattle and cattle are going down, live cattle, feeders could lose some ground, but we have to keep a close eye on what that cash market's doing.
Okay. Now, and this market, this move down was very sudden in feeder cattle. Was it just technical? I mean, what prompted it? It kind of seemed to come out of the blue.
Something I like to call vacuum market, and we see it all the time. Crude oil, gold, cattle, grains, it doesn't matter. What happens is we push the market up, we buy, and all of a sudden the buy orders are gone. There's nothing underneath this market, so you start to get a few sell orders in, and it collapses, and it goes down limit, and then you get more sell orders coming in, and there's still nobody wanting to buy. I say, to me, it's just they hit a price vacuum where there's no orders, and it allows it to make these big volatile moves really with no change in underlying fundamentals. And again, we see it all the time in different markets. A lot of times when we get into the holiday season, when trade volume actually starts to come down. So the fact that we saw it in feeder cattle, not a huge surprise. It is a thinner traded market. It looked like we had a few sell orders come in. They're just, there was just this area where there were no buy orders.
All right, and so that's what happened. Well, Darin Newsom, I want to thank you for taking the time to join us here this week.
Always a pleasure, always enjoy it.
Really appreciate it. That wraps up this edition of Market to Market. But I want to draw your attention to a new educational resource we're offering to agricultural instructors, students, and viewers. Market to Market Classroom connects teachers and students to stories about the science, technology, and business of agriculture from America's longest-running agribusiness television program. So we encourage teachers, students, and anyone else who wants to learn more about the business of farming, the impact of science and technology, and even the basics of commodity trading to take advantage of this free online resource. And be sure to join us next week when we'll reflect on 2014 and examine the outlook for rural America in the new year. Until then, thanks for watching and happy holidays.
Market to Market is a production of Iowa Public Television, which is solely responsible for its content. Funding for Market to Market is provided by Grinnell Mutual. You think differently about a customer when you stand in the middle of his dreams. We work to make sure you get covered right. Grinnell Mutual, a policy of working together. Information on finding an agent near you is available at grinnellmutual.com.